Hey everyone, this is a trader investor. I want to go over what the markets are doing and how they ended up the cash market today. Today being end of Wednesday, it's the middle of the week. So the markets had a really good rally today. Overall, all the markets rallied. As you can see, everything was an up day. Everything was an up day. But I want to go over a couple of interesting ideas. So this morning, as you know, the markets were opening, as we were starting to push up, I mentioned that this area was an area of concern. It was a headwind, and you can see price did stall there for a little bit before pushing up. So now we have new higher highs, and we have new slightly higher low. So I want price to continue to push and close this imbalance and continue to push for us to say we are in a solid return of that uptrend, right? Just like we keep seeing highs, we make new highs, we have a healthy pullback, we rally, and as you can see in March, we had a healthy pullback, we rallied, but that rally was not long-lived. That pullback continued further until we resumed that uptrend. So I'm seeing something similar here, something similar that could happen, especially because we have some liquidity left behind here. Liquidity in a couple of senses. There are people who would be interested to go short here. There are people who would be interested to take a bounce here. So all of those will be manipulated and price will decide what it wants to do. And what it wants to do from here could be here, manipulate, go down. It could be here, trying to do this, manipulate, continue up. Either way, there will most likely be some manipulation in this area. So I'm just patiently waiting to see if we have that long-term. This is long-term is now confirmed. I want to see now this imbalance closed and this next high is broken to have some full confidence that the full uptrend is resuming. And a healthier way to get there is close this imbalance, make higher lows and continue. And as we break these highs, will be in a good territory. But also again, we want to be careful of price manipulation as we break these highs. There might be some orders already sitting here waiting to trigger long as soon as we break this by a point or half a point or however much that a lot of retailers are putting here. They might be manipulated out. So I will always say, if there is a possibility of manipulation, let's wait for that manipulation to be over. That way we have better entries, we have better outcome, right? Without having to be whipsawed in and out. Even if we have wider stops, to me that's just putting on more risk instead of waiting for manipulation to take care of itself. So that's what the SPYs are doing. And Qs, very similar. We have a healthy pullback, we have a good rally, but in the Qs the rally is not able to break these highs. So when the Qs are struggling, I'm wondering, is there further downside to this market? Because the Qs are very strong usually. So when the technology is showing weakness, is there some more downside coming up? We'll see how we open tomorrow. Are we going to open a gap down? Are we going to open a gap up? When you're looking at the futures are not saying much. Very low, 0.1% for the ES and the NQ. RTY is a little bit deeper pullback, and YM is even smaller pullback in overnight markets, in the Asian market. So I'm not too concerned there, but we have yet to see what the markets do in the morning. Here IWM, I always say IWM leads us out and they lead us down. So up and down, they're both leading. So we are at an area of liquidity here. Was this liquidity manipulated here, or could it be manipulated again here? We have yet to confirm. We have yet to see what price does. Here, if there will be a manipulation, anybody who has entered long here will be manipulated out here. And anybody who enters short as these people get manipulated out, they get manipulated out as well, and price will resume. Because we have this imbalance that we just closed. I'm going to keep my drawing here because I want to see what it does when markets open. Does it fully close this imbalance and continue, or does it do something else? And this imbalance is drawn on a lower time frame. That's why you're not seeing it all the way up here. I believe I drew it on a 15 minutes. Yes, it's a 15-minute imbalance. Of course, we've closed it. There's no more obligation that the algos need to fulfill, but I want to see what price will do around it, and price will also continue to fill the next gap up. So this imbalance here, this one is taken care of, is along the way. So tomorrow, if I get a good signal that this manipulation is taken care of, if I see this, and if I see price pushing up a little bit, coming back here and here, I'm entering a good position here. I'm entering close to full load here because I'm expecting for us to hit this area. So, you know, the closer we are to the imbalance for an entry, the more confident I have for higher load, because it's a $2 move room up here. If the entry area is way up here, then I might not even enter it because there's not much room here before this imbalance is taken care of. Price could go da-da-da-da-da-da and have a break at that imbalance, right? They could start hitting the break earlier. So I don't want to risk that. That's why I prefer a lower area of entry to hit these targets, because in IWM, we are still in consolidation mode. We're still in consolidation mode, and I have removed now, this is where I had terminal shakeout. I have moved it to this level here because it has shown a strong sign of strength. And so now, once we break above this test area, we're back in business for bullish. That's why I'm a little bit more cautious, because we still have some headwinds. We still have not cleared this area. We start to get more and more confidence when price maybe comes back. Maybe price comes back here and reverses. Gives us a little bit more confidence, as opposed to up here, down here as a stop area where it reverses, making a good higher low. That's a good spot for us. So we'll see how the market is acting and what the market wants to give us. We trade what the market gives us. Diamonds cleared. I didn't want to delete this until I shot this video. Diamonds cleared not one, not two, but 3 imbalances. The diamonds were extremely strong today, and they took care of all 3 imbalances. So there is no more obligation here, but what we have now is a new imbalance left open. So we have an imbalance right here because we had a very strong up move. We have that imbalance left open. There's also one here, but very tight, so I usually ignore those. So we have this imbalance, and this hourly order block that I drew as a reference to see where the turning point is is also taken care of. And note one thing, note that most order blocks and imbalances are very, very close together. Very close together, because as soon as an order block hits and price starts to shoot up, this is where we leave gaps open. This is where imbalances occur. So because of that, you see them close together. So once price retraces, this would be, if I decide to enter on a short position, on a put position, this is where I would look to exit at least some part of my position and some down here. That's why I like to draw them, because I use them as an exit, not as an entry. It's just a reference guide. Where could price go and halt momentarily before it continues down? Because once it clears this imbalance, I expect it to come down to this order block, even though it's a monthly and I'm not trying to find the best place for my entry. The best place for my entry are these long-term daily order blocks. This is where, you know, I'm very happy to enter, and I don't exit on you know, overnight trade. This is where I will keep it for a longer period of time. And when you keep those longer, that means you're out further in expiration, which means greater capital ask per lot, right, per contract. Therefore, you have to manage the number of contracts that you do. If I'm doing 10 contracts, as an example, in a shorter term, you know, in 2-3 day expiration, expecting to get in and out today, I will not do the same contract size for my, you know, 30-day out options, because they're a lot more expensive. So as a result, you know, if they're costing me $400-500 per contract, I'm not going to spend as much as I would if I were to do it when they are only costing a couple hundred a contract. So just to give you context on how I look at my position size and how I enter them depending on expiration. And so diamonds were the most beautiful today. They closed 3 imbalances. They closed the gaps here. This gap is being negotiated now, almost at a point where we're going to close it. If this market is going to turn, I believe it's going to close this gap first and then turn, and then see what happens in this area here. Maybe we do this. So this is very high possibility, because IWM, my leading indicator that says, hey, if small caps are ready to rally, we're good to go. I'm not seeing any sign of strength in the IWM yet. So that's why I am a little bit more cautious. And in addition, the VVIX, for example, the VVIX is high. It's now above 110. If I go to my daily chart, you'll be able to see VVIX has now turned yellow. That's this dotted indicator here. The next one is put-call ratio, but put-call ratio is still at a low number, so I'm not too concerned there. It's still under my threshold. If both of them turn yellow, it's like, wow, I'll be more careful. But for now, VVIX, they're telling me, hey, just you know, start to look out. Of course, today's value is significantly less than yesterday, so we could see price pushing back down. The price meaning VVIX value pushing back down, and our markets pushing back up. So that is an interesting thing that we will see. So with that, I will remind you again, don't forget to like this video, because this is how I know that I am helping you. This is my encouragement to do more videos. So please like this video. And as always, I will see you in the next video. Take care, everyone.